Hello. Thank you for listening. Thank you for watching. This is part 17 in a 50-part video series based on my best-selling book, Trading Wisdom, 50 Lessons Every Trader Should Know. You can find this book right now on Amazon in 4 formats: Kindle, hardcover, paperback, and audiobook, narrated by me, Cheds, which is awesome, author, narrator, publisher. But when the book first came out, there was a lot of demand for an audio version, and I didn't have one. So what I started doing, if you go to my YouTube channel, click on the playlist, Trading Wisdom, I'm doing one lesson at a time for you for free. And I really, I read through the book, I expand on the lessons in the book, and I kind of explain it. This gives me an opportunity to expand on the lessons, but also a way for people who can't afford the book or don't want to buy the book or can't buy the book. It gives them a way to get access to the content. So this is the free version of my book. I'm doing lesson 17 today. Don't fight the trend, ride it. Last time we did switch time frames wisely. And next time we'll do chapter 18. Lesson 18 is to stay focused. Just to remind you, you can find my book on Amazon. I'm also the author of My Battles with Cancer. It's my cancer memoir. I'm a cancer patient and caregiver. I want to send this to you for free. You don't need to buy it. So just get me your email address somehow, and I'll send it out to you. I've been sending out quite a few of them recently, which is really cool. On my YouTube channel, there's tons of great stuff for you. Something that's new are these Twitter Spaces, where we have audio conversations. They're Ask Me Anything segments. People come up and ask questions, and we just talk. And each one is 20 to 30, question and answers. They're great for learning how to trade. There's 13 videos here. You need to soak these up. Check out the masterclass playlist, right, with a beginner, and now we have a new advanced masterclass. You want to check that out if you're serious about TA. If you're really serious about learning how to trade, you need to join Bitcoin Live. Bitcoin Live is the best in-class educational platform for crypto. I'm a founding analyst, and we have literally a world-class team. I think the best in the world in terms of analyzing crypto. And, I'll stand behind that. And I've been doing my self-market updates for 4 years, twice a week. No matter what's going on, I stop and I do an update. I'm just really proud of what we've done there. I'm proud of the team. So, consider checking that out. There's the book, free version of it on my YouTube. There's the cancer memoir. And of course, I am on Twitter at Big Ched. Let's get this book up here. So we have the book. I'm going to leave this about the author and intro up here. You can read this briefly. I'm not going to read it. I think I did that for the first video. But you can just hit pause and read these things. And what we're going to do today is we are doing 17. Don't fight the trend, ride it. Right? We did 16 last time. We'll do 18 next time. I'll eventually get through the entire book. Right? It's going to take a little bit of time, but we will get it done. So thank you for watching, and let's get right into it. So lesson 17, we're going to start out the chapter with a quote. Quote, "The investor or trader should never attempt to anticipate a reversal, but rather should wait for the actual reversal and then act with the comfort of trading with this new trend." I go on to say, "A fundamental law of technical analysis is that you should wait for a clear signal to appear and then act on it. Don't get cute and try to guess where the exact bottom lies. Instead, wait for a signal to clearly define itself and then deploy your funds with the benefit of the trend at your back." So, investor or trader, doesn't matter what you're doing. You should never attempt to anticipate the reversals. You should wait for it, right? So the whole thing is, your job is to ride a trend while it's profitable. And then while you're riding the trend, you watch for signs of it weakening. And that gives you the ability to exit your trade, or at least kind of watch for further signs of weakening to protect your profit, protect your risk amount. You want to ride a trend rather than fighting it. And it's really tempting to just buy into a downtrend because you think, if this is the bottom, if right here and this time is the bottom, then I caught it and I can ride it up and it'll be a nice and easy trade. But you're buying into a situation where it's more likely than not to continue down. Every time you're doing that, it's 70, 80% likely to continue down, right? Trends tend to continue. So rather than kind of just randomly buying, what did I call it? I said, don't get cute and trying to guess where the exact bottom lies. Because, I talk about that a lot in this book. you're never really going to nail the exact bottom. You can watch for it forming, but it's better to wait for the trend to reverse and buy into some momentum, right? Rather than buying into straight weakness in a downtrend. So, so I say, you want to wait for the trend to define itself. So then I ask the question, so how do we know when the bottom is in? How do we know when the bottom is in? What should we be looking for to know when the trend has been reversed? First of all, you want to watch out for volume. This is an important point. We typically see the most volume at the top and the bottom of the chart as the bulls and bears battle for control of a momentum. So that's something you want to keep an eye out for, because you see the most volume at the top and the bottom. And when a trend is when the price is already trending, right, moving up, or moving down, there's already an imbalance in supply and demand. There's either too much supply or there's too much demand, so it's trending. And you don't need volume to continue with the trend. And people kind of get hung up in that. They say, oh, there's not a lot of volume. This move is likely to reverse. But in reality, you actually need volume in order for the move to reverse. You get volume when the bulls show up and say, this is where support is. And there's a big battle, and buyers step in. So typically you see the most volume at the top and the bottom of the chart. So that's one thing you want to look out for. In the book, I go on to say, in a downtrend, you will be able to spot a falling resistance trend line that any future bounce can be measured against. So you have some kind of a descending supply or a descending trend line. And remember, it's not about the line, it's about the trend. So it's showing a series of lower highs, a progression of lower highs. In a downtrend, you'll be able to spot that line that it can be measured against as the price will make a series of lower highs on attempted bounces. You can mark those levels as potential momentum turning points. So those lower highs are what you can watch as a momentum turning point. So rather than jumping in on that dip, wait for the price now to recapture that level, where the last time, the bounce was stalled, this time it gets above it. So now you're kind of flipping, you're breaking the lower high. That's a momentum pivot. That's another sign that potentially momentum is reversing. And that's a much safer place to enter, because you can define your risk as really being above or below that level, that pivot, that lower high. And I say here in the book, perhaps most important to any reversal is a higher low. You have to have a higher low, the real first step towards generating a bounce. So even if you think that deep wick, that hammer candle, the dragonfly doji, just a deep reach of the lower Bollinger is the bottom, most of the time you're going to get a retest of that and you get some type of a higher low. So you can watch for the higher low as well. Without a higher low, you have no reversal. So that's it. So watch for a higher low as well. And then you start to get interested, rather than guessing on that breakdown and say, okay, maybe the bottom's here. It's like, it's just a fool's errand. And so, we talk about higher low. I talk about higher lows. I say, the way a higher low forms can be explained psychologically. Once we all agree that a bottom has been put in, the market forces, our greed kicks in, and we want it to dip back down to that level so we can load again. So let's say, whatever you're trading, it's usually in 100 and 120 range, and now it drops to 80, and it's bouncing back up. And so now everyone says, wow, I wish I had bought there. I want to buy if it gets there again. Basically, we wanted to dip back there so we can load, this time with the confidence of the trend in our favor. As the price approaches this level again, getting back down to 80, buyers get anxious, and fearing that they might miss out on the move, they move their bids up, and then the higher low forms, right? The higher low shows increasing buyer demand. And that's also something you can use to structure your risk. You're long as long as that higher low forms. So you're watching for volume, you're watching to see a lower high break, or you're watching to see a higher low form. These are things you can watch for when you're looking for a trend to form. Remember, we're trying to ride the trend rather than fight it. finish up the chapter with a quote. My best advice to you is to follow momentum. Don't be fancy and try to anticipate when it will turn around, right? Follow the momentum. Don't be fancy. Don't try to get cute and guess the bottom. Just ride with the trend. I mean, trading is hard enough as it is. You know, it's so easy to get stopped out. You think you have a great idea. Just follow the trend, listen to the price, let it define a level for you. You know, wait for these bottoms to form rather than kind of rushing in and just getting stopped out. So that's lesson 17. Trading wisdom, 50 lessons every trader should know. The response to this book has been just unbelievable. I think it's, you know, we're getting up to almost, you know, 15,000 copies sold, which is ridiculous. I think that puts it in like the top, you know, few percentage point of books. Most books don't do that. So I want to say thank you to everyone for that. And that's why I love doing this free version. You know, you should be able to get a free version of the book on my YouTube channel, Ched's Trading. Check out the playlist. This video, I'm going to premiere it. We'll put it here in the playlist. I will remind you, I'm the author of My Battles with Cancer, right behind me. That was the first book I published. I'm a lymphoma survivor. And one of my family members also had cancer. So I was a caregiver as well. I wrote about that experience. If you think that will help you, find a way to reach out to me, find a way to get me your email. I'm just going to send you that book for free. So keep that in mind. I'm, of course, on Twitter at Big Cheds. If you really want to learn how to trade, you got to join Bitcoin Live. It's the best out there. It is the best in-class educational platform for crypto. World-class team. I'm a founding analyst. I've been doing market updates there for 4 years. I don't miss one. I just did one last night. I do it twice a week, literally no matter what's going on in my life. And I'm really proud of that fact. Practice makes perfect. You have a great team, great group of members. I would definitely encourage you to check that out. So it's been fun. I've been enjoying doing this. Here, lesson 17. Here we go. Lesson 17. Don't fight the trend, ride it. And next time we'll do stay focused. You know, in 3, 4, 5 weeks' time, I'll get that next one out. But folks, thank you. I really appreciate your time. I want to say thank you for being part of the community. And more than anything, thank you for all your support. So thank you very much. And I will talk to you soon. Big Cheds out.